we could have made a lot more money, but we overlooked this one thing. So in today's video, I'm going to explain what that thing was. And we're going to take a look at the S&P 500, the NASDAQ 100, the Russell 2000, the dollar. We're going to figure out what's going on with the VIX, and then also the bonds. All right. So without further ado, let's get started with the video. All right. So number one, this is where we exactly messed up. So essentially, Google is one of the large tech stocks, right? And you can see that Google opened outside of its lower level of the Bollinger Band. What do we know? When we open outside of the lower level of the Bollinger Band like this, it means extreme overextension to the downside, which means that there should be a bounce. Google was basically giving us the keys to the market today. It was telling us, basically, just think about it this way. It was telling us that we were very overextended to the downside, according to Google. This strength in Google, if Google was going to bounce back into the Bollinger Band, that was basically giving us a proper direction for the market today. If we opened outside of the Bollinger Band, the chances of us completely falling much, much lower, very, very slim. So Google opening outside of the lower bands like that pretty much gave us a clear-cut reason to automatically go long on the NASDAQ. And I overlooked that today, this morning. And we can clearly see when you're looking at the rest of the tech stocks, the NASDAQ, for example, was the biggest winner today. It was up 1.18%. And just looking at how Google opened would have made us a lot of money, to be honest. So just always, every single morning, it's very, 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 very important. Look at all of the large tech stocks and see if they're opening outside of their lower level of the Bollinger Band. That little small mistake from this morning cost us a lot of money. Like, we could have made a lot of money. So basically just use that, do that every day, right? Like, just try to see if any of the large tech stocks, Google, Tesla, Apple, Microsoft, Amazon, blah, 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 Google, AMD, Nvidia, SPY, QQQ, or IWM, any of those, check to see if they're opening outside of the lower or the upper Bollinger Band, and it'll be a good indication of which way the market should go, because the market ends up doing the opposite. So if we're opening outside the lower, big chance that we're going to bounce. Okay, so as you can see, Google gave that indication, and based off of Google, the rest of the tech sector bounced very, very heavily. Microsoft bounced, Apple, piece of crap, bounced. Tesla, of course, bounced. Nvidia, AMD, not so much, but Amazon freaking killed it. So that's basically what I wanted to really explain. That's just the first thing, okay? And then the second thing that we're looking at on the SPY is we literally opened at a beautiful level of support at 433.59, and I was showing this level. And so there's two things that were basically perfectly in confluence. We were right at a level of support on the SPY, and Google was trading outside of its lower level of the Bollinger Band. So those were two big reasons why a bounce was meant to happen. And that is fun. So basically, yeah, like just things like that. Obviously, it's not a mistake. We didn't lose money, but simple things like that can really make us a lot more money. And yeah, just keep that in mind. All right, I hope that makes sense. And of course, if you guys enjoy the content, please make sure to like, comment, subscribe to the channel, put on post notifications, and definitely subscribe to the channel. All right, let's continue. So what are the next steps for the market? So essentially, the SPY, we could quickly take a look at the Fibonacci level from the most recent lows to the most recent highs. And we finally closed above the 23.6% fib. This 38.2% fib coincides pretty perfectly with this 437.70 level, but it's at 437.53. Okay, so clearly, like this, so when you're opening outside of the Bollinger Band, the bounce usually continues for at least 2 days. So I'm expecting tomorrow should be bullish or neutral. It should not automatically be a very, very bearish day. I can't really, I would be very, very shocked to see Google bouncing like this, and we could end up, we could fall and hold this 122.70 level, etc. But I would be very, very shocked to see Google break below the 50% fib in terms of this candle. Okay, now with that being said, essentially, I mean, we just need to look at what the next levels are for the market overall. So clearly this is showing some bullishness, right? If we do get a bit of a pullback, this is not a reason to short. That's my point. This is not an automatic reason to short just yet. I would much rather go short at least above 437, at least above 437.50. Even this 38.2% fib is a bit too aggressive in terms of going short. I would rather it break up to 438, 439 area. By this point, everyone that went short over here, if it breaks back up to this level here, all of the people that shorted down at 437.50 would become bullish, and then this would be the perfect opportunity to go short. Because all of the initial bulls here would then, all of the initial bears here would then become bullish over here. And then when many people become bullish, that would be the perfect opportunity to go short over here at 440-ish area, and then 439, 440-ish area, and then we can go short. So that's what I'm hoping for on the SPY. Obviously, we have support at 436, and then we have major support at 435. Once again, I would be very, very shocked. I would be very, very, very shocked to see the SPY break lower, below 435. I would be very shocked to see the SPY break below 435 tomorrow. And given the fact that Google and the NASDAQ had this bullish move, we could lean long tomorrow in terms of day trading, in my opinion. So the NASDAQ clearly looks strong. This is not an automatic. This is clearly not a reason to go short. And it's purely based off of the strength out of Google and the other tech stocks. So for that reason, in my opinion, easily, we could be playing in day trading wise. We could be trading to the upside until we hit levels of resistance on both the NASDAQ and the SPY. And then, of course, the IWM is taking a big hit because a lot of the money was flowing into these tech stocks. So I hope this made sense. I hope you guys enjoyed the video. Really, we could take a look at the dollar. The VIX, I mean, first of all, the VIX is just out of whack, but we could take a look at the dollar here. And the dollar is also a bit, it's not doing great to determine which direction the market is going at the moment. It's still holding support, and we know that the dollar has an inverse relationship to the market. So if the dollar is showing strength, right, that means the market should be falling. But clearly today, the market did not fall, even though the dollar was green. So it's not every day that this happens. We see that there's been a bit of less confluence in the past few days on the dollar and the SPY, but clearly, a lot of strength is coming out of the tech stocks. And I hope you guys gain value from this. I hope you guys understand why I was a bit upset with the lack of Google. So hope that makes sense. I hope you guys enjoyed the content. I hope you guys enjoyed the video. Thank you guys for watching. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.